Corporate true crime rarely looks like a movie. It looks like emails, spreadsheets, and small exceptions that become habits. In this episode, Corporate True Crime, controls that fail and whistleblowers that succeed. We translate internal control mechanics into plain language and give employees safe channels and scripts. We avoid naming real companies or individuals. Examples are composites built from public patterns. The goal is practical. How to spot pressure points early, how to document without breaking the law, and how to speak up without burning your life down. Start with the anatomy of a control. A control is a rule plus a record. 2 people must approve payments above X is the rule, the audit log is the record. Failures happen in predictable ways. The rule is bypassed temporarily. The log is edited after the fact, or the approvers are not independent in practice. If you learn to ask 2 questions, what's the rule, where's the record, you can see around corners. Here are the 6 failure families you will meet. 1. Segregation collapse. 1 person can create vendors, approve invoices, and release payments. 2. Topside entries, manual journal entries at period end that override messy reality. 3. Side pockets, off-letter spreadsheets controlling cash or inventory. 4. Aggressive revenue, recognizing sales before delivery or acceptance. 5. Expense smoothing, parking costs in assets or deferring recognition without basis. 6. Third-party fog, agents or distributors with opaque rebates and marketing funds. Each is legal in narrow cases and dangerous when habitual. Signals that controls are slipping show up early. Look for rush requests just before close, special handling accounts, repeated exceptions to policy, last-minute bank detail changes, and executives who insist on being the sole approver for speed. Watch for vendor files with missing tax IDs, copy-paste addresses, or bank accounts in names that do not match the legal entity. In revenue teams, watch for deals that rely on side letters, guaranteed resale prices, or rights of return that are not in the main contract. In inventory-heavy businesses, watch for cycles where counts are skipped just this quarter. If you sense trouble, start with a personal log. Write dates, names, requests, and exact phrases. Keep it factual and stored privately without taking proprietary data offsite unless and until a lawful channel requests it. A contemporaneous log is your memory under oath. Do not record conversations secretly unless your jurisdiction allows it and you have weighed the risks carefully. Do not steal data. Your goal is to preserve facts, not to create new liabilities. Next, test the control with a harmless question. For payments, can I see the vendor master file change log for last month? For journals, can you walk me through the support for this manual entry? For revenue, where is the customer acceptance doc and delivery proof? For inventory, can we see the cycle count variance report and approvals? For third parties, who approves marketing development funds and where are the claims scanned? Healthy teams answer with links and logs. Unhealthy teams answer with stories and urgency. Safe channels matter. Most organizations of size have at least 3: your manager chain, internal audit, and a whistleblower or ethics hotline that often reports directly to the audit committee. Many countries protect whistleblowers in law. Learn your jurisdiction's rules. If you fear retaliation or conflict of interest, route to internal audit or the hotline first, not to the immediate manager. Use clear, non-accusatory language. I have a good faith concern about Control X. Here are dates, examples, and the policy language. Ask for a case number and keep it in your log. What to include in a hotline report. Keep it short and specific. 1. A 2-sentence summary, the control at issue and the harm if true. 2. A dated timeline of 3 to 5 examples. 3. The policy or accounting standard you believe applies. 4. Where the records live, system names, report names, folder paths. 5. Names of people who can corroborate. 6. Any immediate risk, payments pending, system access, data export. End with your availability and whether you consent to being contacted. Anonymous is allowed in many places, but identified reports with facts are often easier to act on. How internal audit works in plain words. They test rules against records. They sample transactions, pull logs, and compare to policy. They interview quietly. If they find a pattern, they classify the severity and the root cause and recommend fixes. new approvals, removed access, reconciliations, or in serious cases, external investigation. Internal audit is not the police, they are mechanics. Treat them as allies. When you report, you help them focus scarce hours where the fire is likely. Executives under pressure are not always villains. Targets slip, investors want smooth graphs, and a temporary fix appears. Months later, the fix is the process. The ethical move from inside is to translate pressure into policy language. We can ship this quarter or we can follow revenue recognition rules. Here are the consequences. Offer alternatives that stay inside the lines. Discount to close next quarter, partial deliveries, or adjusted targets. If you are overruled, document the decision path. It protects you and it clarifies ownership. For accountants and FP&A folks, a quick red flag checklist. Revenue, side letters, bill and hold, channel stuffing, extended rights of return, or consignment masked as sale. Expenses, capitalization of routine costs, accrued liabilities without reversals, or suspense accounts that never clear. Balance sheet, aged reconciling items on bank recs, intercompany balances that only grow, or inventory reserves that flatten despite rising write-offs. Cash, manual journals to cash, unusual other receivables, or large advances to related parties. Any three together deserve a deeper look. Third parties are where many scandals live. Agents paid from marketing, or facilitation funds, distributors with guaranteed margins, or charities used as pass-throughs. All can move money off the clean path. Defenses are procedural. Perform due diligence with adverse media checks and ownership lookups. Define allowed rebates and require claims with original documentation. Require 2 sign-offs for any payment outside contract terms, and publish a quarterly list of high-risk counterparties for extra review. Transparency is antiseptic. If you decide to step outside the organization, pause. External reporting to regulators, auditors, or the press has legal and personal implications. Get counsel if you can, ideally from a lawyer experienced in whistleblower law. Preserve only what you are allowed to preserve. Do not publish proprietary data on social media. In many jurisdictions, reporting to a regulator can carry protections and sometimes rewards. Reporting to media rarely does. Choose process over catharsis. For leaders, build a culture where small signals reach you before they become headlines. Publish simple rules. No single person can add a vendor and pay them. No manual journals without CFO approval and documentation. No off-ledger spreadsheets as system of record. Fund internal audit properly. Rotate duties. Use anonymous pulse surveys that ask one question. Have you felt pressure to bend a rule in the last quarter? Share results and responses. Celebrate people who stop bad habits early. It sets a norm that beats fear. What to do if you get it wrong? If you raise a concern and new facts show there is no issue, say so plainly. I raised X in good faith. Further information resolved it. Thank you for reviewing. Good faith mistakes are not a failure. They are proof that the system accepts scrutiny. The enemy is not questions, it is secrecy. A short script if you need to speak up tomorrow. Hi, internal audit hotline. I have a good faith concern about control. I observed 3 dated examples. Policy name/number, says short quote. The records are in system/path. The risk is payment misdirection, revenue misstatement. I request an independent review. I am available at contact and consent to follow up. That is enough to start a serious process. We end with a steady principle. Controls are not about mistrust. They are about memory and incentives. They help honest people stay honest under pressure. When you ask for the rule and the record, when you document calmly, and when you use the channels that exist, you turn a messy fear into a managed risk. That is corporate true crime with a twist, not scandals told for shock, but systems tuned for safety. Next time, we'll examine cross-border data requests and open-source intelligence inside companies. How to respond ethically when investigators, regulators, or journalists come calling, and how to protect private people while meeting lawful needs. Narration generated with AI, facts verified from public sources. No legal advice is given. The purpose is education and public safety. If you have a case tip or a documented pattern to share, use a safe channel and remove personal information that could identify non-public individuals.